12 months or so. Partly it's COVID-related, but also the fact that the regulatory side is very uncertain. So net, we can expect the market to stay in deficit. That will force prices higher, particularly as the vaccine rollout really gathers momentum now. And we see that, particularly between places like Europe and the US, they'll start to travel more. Airline traffic will begin to pick up, intercontinental, and that will see another pickup of 3 to 4 million barrels. Yep.
Wayne, I want to get your views on where we are when it comes to base metals, the iron ore rally in particular. Take a look at this chart, which shows that projected earnings, of course, Australia being a major beneficiary, projected earnings over the next 12 months when it comes to the materials and mining index are now at the highest level in over 13 years. Now that we've had a bit of a breather, is the rally still intact? Are we still talking about a super cycle?
Yeah, I think I still challenge the super cycle idea a little bit. Largely because the last time we had a super cycle, it was largely due to the urbanization and industrialization of China. Obviously, with this shift or the transition economy to lower carbon output more generally, is going to take significant amounts more of nickel, copper, all the metals, as well as a pickup in infrastructure, such as commodities that produce steel. So generally speaking, yes, we have these sort of structural demand drivers in play over the next couple of years. The argument I would make is that at least on the copper side, we could see a bit more mine supply come into the market in 2022, which could cool prices a little bit. However, until then, we see the market very, very tight, and these sort of prices continuing to prevail. Just on the steel side, clearly, the more we discuss the reduction of emissions, and particular China attacking emissions pretty heavily now, and they'll have to continue to do so over the next few years, clearly that's going to pave the way for higher demand for high-quality commodities, such as higher grades of iron ore, and as well as that, natural gas to help in this transition, and particularly for things like gas. I think that's been largely forgotten in this strategy over the next 5 to 10 years.
Wayne, you talk about China. I want to get your FX views on what happens to the yuan now that we've heard pretty clearly from the PBOC and authorities that they want to stop the rise.
Yeah, I think that at least on the PBOC side, I think their strategy is to basically slow the appreciation of the CNY. I'm not certain that these actions will bring about a depreciation of the CNY. I think it's very much to slow the appreciation of the CNY. Of course, it's a monumental action in the sense that after talking about their concerns for some time now, this is actually real action on the table. However, of course, when we think about our view, we do see a weaker dollar over the next 6 months. But after that, we think that real interest rates in the United States will start to rise. We think the interest rate differentials will begin to play in the US dollar's favor. So at least for China, I think they have to probably deal with this appreciation, particularly against the dollar over the next few months. But I think at least from our perspective, we expect the dollar to strengthen in 2022. We think that the euro dollar, for example, goes to around 125, and then we think it turns around and heads back towards 120. So at that point, that would start to give everyone a bit of relief, at least those countries which are pretty concerned about the appreciation of their currencies.
Wayne Gordon, Executive Director for Commodities and FX at UBS Global Wealth Management there. Plenty more to come on Daybreak Asia. This is Bloomberg.
our generation's biggest problem,
Climate change is happening.
and the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming,
We can and we will deal with climate change.
and the fight against climate change. Bloomberg Green has you covered.
Well, the world's number 2 tennis player, Naomi Osaka, has withdrawn from the French Open after a disagreement about participating in a mandatory press conference. She posted on social media that she had suffered from bouts of depression since 2018 and that she will take some time away from the tennis court. For more on this, we're joined by our Tokyo Bureau Chief, Sophie Jackson. So, Sophie, just casting a glance at the social media reaction, there's an enormous amount of sympathy and support for Naomi for doing this.
Yeah, absolutely. That's from other athletes as well as fans. And when it comes to Naomi Osaka's sponsors here in Japan, we haven't heard much out of them yet, but we have been watching their shares since the Open here in Tokyo, and they have not taken a hit. Naomi Osaka's withdrawal from this tournament is something she said she never imagined or intended a few days ago when she posted about her decision to pull out of those media appearances, a move that was intended to alleviate the pressures on her mental health, but it did lead to a couple of days of intense negotiations with the organizers, and they were unable to come to a compromise. So it's a setback for Naomi Osaka to not be able to take part in the tournament, but it does send a message to organizers of similar events. If they want her there in future, if they want her star power, they may need to make some compromises in terms of looking after the athlete's mental health.
And quickly, how has the French Open responded?
So ahead of her decision to withdraw, but after she had said she wouldn't go to the press conferences, the French Open got together with the other Grand Slam tournaments and they released a joint statement warning that if she opted out of media events in the future, she could face potentially default or even suspension from the Grand Slam events. And today, after her decision to withdraw, the French Open had a much briefer statement saying it is unfortunate, but she is welcome next year. And when you look at the statements from both sides, from the organizers and from Osaka, you do get the sense perhaps there is a generational gulf in the way that we talk about athletes' mental health. She said that the social anxiety is an intrinsic part of her and she needs to do that self-care, and perhaps pulling out of these media opportunities was one of those things. The organizers didn't see it that way.
Sophie Jackman, our Tokyo Deputy Bureau Chief. And then there were 3. At least that's the number of babies China hopes many couples will have following Beijing's latest steps to address falling birth rates. Our co-anchor David is here with a look at some of the numbers. Dave.
Yeah, so obviously this is not a secret. Declining birth rate in China. The 2 circles essentially indicate the big shift towards policy, the one-child policy, and towards the middle part of the last decade. They removed that,
David,
of course.
looks like we have some audio issues there, but yes,
Oh.
China's population policy, very key, of course, coming up. We're getting more insight on that as well. So let's take a look at what's going on with markets, perhaps. We're going to get more insight on China's latest policy changes with Teneo's SVP and China analyst Gabriel Will-Dow. So that's it from Daybreak Asia. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. Also, we'll be looking to the open in Malaysia. You have KL stock futures pushing higher. We're learning that Toyota is halting Malaysia operations as the country there enters the lockdown. Now, stand by for Bloomberg Markets, the China Open. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley to management shake-up, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
A capitulation phase is by.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered.
It is 9 a.m. in Beijing and Shanghai. Welcome to Bloomberg Markets China Open. I'm Tom McKenzie.
Yep, good morning. And I'm David Ingles here in Hong Kong, just counting down to the open of trade in the Chinese mainland and here in Hong Kong. Let's get to your top stories today. China taking its most significant step yet to curb the strength in the currency. The PBOC forcing banks to raise their FX reserves with the bank for the first time in more than a decade.
Another policy push from Beijing. All couples will now be allowed to have a third child, but some say China's efforts to tackle its aging population are too little, too late.
Plus, we're talking carbs and noodles here. Philippine noodle maker Mondanisan is taking on Beyond Meat and Impossible Foods as it gets set for its trading debut this hour. We have an exclusive interview with the boss, Henry Sosanto.
So, David, did the PBOC take out the shotgun or the pea shooter when it comes to the yuan? The strategists and economists we've been speaking to suggest the latter, potentially. If you speak to Citi, Commerzbank or Standard Chartered, they say this is unlikely to halt the appreciation of the yuan. We'll be checking the fix, of course, at 1:15 and the impacts on the markets, David.
Absolutely. More a whisper, really, when you look at, I think we're now, there we go, a little bit of strength coming through. Last time we were at these levels on the currency, Tom, was, well, last Friday. Okay, let's briefly check in a lot of these equity markets trading across the region here. So have a look at China futures and within, of course, the China story. We didn't mention this yet. We're looking at these baby-related shares and, of course, over in Tokyo. There we go, pigeons all the way up. 8% biggest gainer across the region today on this new three-child policy. Flip the boards, and we have a rate decision, by the way, coming out of Australia, some stellar export numbers out of South Korea. Taiwan's opening up. You have Singapore, by the way, we heard from the Prime Minister overnight, this path to reopening the economy. Malaysia, of course, taking a poleaxing yesterday. All right, let's have a look at the FX markets right now. We showed you dollar China. What are we doing here on the Aussie dollar? Sterling's actually all the way back to levels last seen in 2018, April of 2018. Of course, Taiwan dollar, read all about that yourselves. They're bottom of the screens. And a quick look at the 10s. Commodities, I think you have copper here. And what else did I put in here? Copper and we have one more. There we go. Thank you so much. Brent crude. Yes, we have an OPEC meeting, of course, later today. Expected to essentially rubber stamp that decision last month, that next month they'll be maybe taking a little bit off output. All right, let's get back to our top story today. So the PBOC yesterday forcing banks to essentially put a little bit more money with the bank here. First time in since 2007 that they used this specific tool. Let's bring in Sofia Horta-Acosta, our Chief China Markets Correspondent, to talk us through, of course. We rarely saw, well, they don't really use this kind of tool. What was it, and what is it meant to do?
Yeah, so exactly the mechanics of it is because these banks need to hold more foreign exchange as reserve, it mops up liquidity of the dollar and other foreign currencies in the onshore market, which essentially weakens the yuan. It's a kind of demand-supply thing. Right. So they haven't increased this rate. It's been 5% since 2007, and from June 15th, it'll be 7%, an increase of 2 percentage points. So not a huge increase, but still it's the most visible step taken by China to really slow this latest leg up in the yuan. Let's not forget that they took a lot of measures in October, making it very cheap to short the yuan and also opening more channels for capital outflows. So it's not the first kind of measure since 2007. It's the first time they used this specific tool.
So, Sophia, is that what this is all about? It's about slowing the appreciation rather than stopping the gains altogether. What are you hearing from strategists?
Yeah, exactly, Tom. So if they really wanted to slow, encourage depreciation, there's a lot more that they could do. It's important to know that this is not direct intervention. It's still, the PBOC is not directly intervening in the currency market. It's a signal. It is a measure, a concrete measure, and as you said yesterday, the first of after a series of rhetoric and a lot of commentary from the PBOC is the first measure that they take. But importantly, and the City Note out this morning was quite explicit on this. This is not going to slow the This is not going to stop the appreciation pressure on the yuan. You have a currency that is higher yielding than any other major economy in the world. Those inflows will keep coming from foreign investors. It's an attractive market. Also, if the fact that the PBOC is not encouraging depreciation will in a way embolden currency traders to buy the yuan, Tom.
Okay, Chief China Markets Correspondent Sofia Horta-Acosta breaking down this latest move by the PBOC. And for more on China's moves to rein in the surging yuan, we are joined by Gabriel Wildau, Tenio's SVP and China analyst. Gabriel, thank you for joining us in all of your time, whether that's at the FT or Gavocol, Dragonomics, or now at Tenio, watching the yuan and the policy action from the PBOC, taking all of that together. What does this signal, this action, for you? What are you reading into it?
It's clear that officials want to signal to the market that they're monitoring the appreciation pressure and that at some point there will be a limit to how much appreciation they'll tolerate. But as your colleagues have indicated, I don't think we've hit that limit quite yet. And indeed, I think a mild appreciation isn't really a problem for the PBOC. It actually helps with higher commodity prices. It could help a bit to ease trade tension with the U.S. and other partners. But the issue is if investors and companies start to see the renminbi as a one-way bet, and that this expectation then encourages speculation, and that kind of speculation is what we saw the PBOC warning about in its recent statement, where they said that the renminbi can appreciate and depreciate, and no one can predict the exchange rate. So whether it's depreciation when we in 2015, in 2016, or appreciation over the last year and a half, it's the one-way bet aspect and the speculative aspect that concerns regulators the most, rather than the direction, mild swings.
Gabriel, what are the other tools? What are the other tools they could reach for then, if speculation does become an issue?
Well, we've already seen evidence that state-owned banks acting as proxies for the PBOC are buying U.S. dollars to slow appreciation, and so we could see more of that. We could also, the most blunt instrument, of course, is direct purchases by the PBOC, and those are way down from the peak in the 2000s, but at some point those could come back. As I say, though, I think we're quite a ways from that point at this moment.
Gabriel, David here. Since the three of us are kind of old China hands and we're talking about the currency and reform, I mean, I remember way back, I was a poor student. I still am poor. I'm no longer a student, though. When the exchange rate was at 8.2, right? And back then, the priority of the government essentially was exports, and that's now shifted, consumption, services. But you're now saying that we're actually rebalancing back or shifting back towards those old priorities. Tell us more.
Yeah, so in the period when the renminbi was at 8 to the dollar, and all the way when it reached 6 to the dollar, in 2014, part of the rationale for that was this rebalancing rationale to encourage consumption, to reduce trade surpluses. And I think what we've seen over the last few months is a series of policy signals indicating that rebalancing and pro-consumption policies, which which kind of were the basis of so many hot investment themes for foreign investors, whether it's healthcare, education, consumer finance, all those consumer bets that foreign investors were making. Policy is now shifting away from that pro-consumption tilt and back towards encouraging investment. And there's a recognition that a continued high rates of savings investment will be necessary to deal with China's enduring challenges, whether it's export controls from the U.S. and the need to build up self-sufficiency in key technologies, or whether it's to deal with demographic aging, that high investment is here to stay, and pro-consumption policies are, while they still exist in the rhetoric to some extent, are really on their way out in terms of being a key focus of Chinese economic policy.
And that's a perfect jumping off point, of course, for the next segment, which, of course, you'll stay in for. Of course, we're talking 3 babies. That's the hope, of course, with Gabriel Wildo there. More on that story after the break. In the meantime, Paul Allen, he's been waiting in Sydney, and he's got your first word news. Paul.
Thanks, David. The leaders of Australia and New Zealand have urged China to allow outside observers access to Xinjiang in a move that's likely to draw criticism from Beijing. In a joint statement, Prime Ministers Scott Morrison and Jacinda Ardern expressed their concerns about the human rights situation in the province. They also commented on the erosion of rights in Hong Kong and China's territorial disputes in the South China Sea. South Korea's exports surged in May from last year's slump, rising by their biggest margin since 1988. Overseas shipments were up almost 46% from a year earlier as major global economies reopened. While export growth was in part inflated by last year's 24% plunge, those big gains reinforced the view that global commerce is recovering from the pandemic. India's economy expanded faster than expected last quarter before the latest wave of infections forced lockdowns across much of the country. GDP rose 1.6% from a year earlier, marking the second straight quarter of expansion after a rare recession that tipped the economy into contraction in the last fiscal year ended in March. India is expected to grow by a world-beating 10% this year, despite the pandemic. A new study has found that the Sinovac vaccine can effectively control COVID-19 in a mass inoculation, where 75% of adults in a small Brazilian town were covered with a second shot. The study may offer clues on how much of the public needs to be vaccinated in order to move past the pandemic. The study showed that deaths, hospitalizations and cases dropped sharply after a second shot of Sinovac was given. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Okay, still ahead, an exclusive interview with the CEO of Philippine noodle maker Monde Nissin as the company makes its trading debut in Manila.
All right, also coming up here, we're looking ahead to the currency fix of the day here after the last few days. Have a look at this chart, rightmost side of that graph, the weakest setting relative to estimates in weeks. Also counting down, of course, the cash open, Shanghai, Shenzhen, and here in Hong Kong, you're watching Bloomberg Markets, the China Open. Good morning.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
The world economy is going to be $9 trillion richer between now and 2025 if vaccinations are accelerated.
All right, welcome back. Let me take you back to the last 5 days of May. When we talk about the Chinese currency, there we go on the stronger side of that range. We're looking at the fix. The estimate for today is 635.56. That should be out within the next 3 minutes or so. So stay tuned for that. Of course, the currency, Tom, still very much in focus today.
Yeah, two big policy announcements out of Beijing yesterday towards the end of the day. One involving the reserve ratios, of course, we've covered that. The other, the child policy, the family planning policy. So China has relaxed its birth policy, allowing all couples to have up to 3 children. But some economists are not convinced the new measure will be enough to spur its falling birth rate and reverse a decline in the country's working age population. Let's take a closer look then with China government reporter Lucille Liu. Joins us in the studio here in Beijing. Lucy, can you give us some more background then on this decision by the government?
Absolutely. So the government not only announced raising the child limit from 2 to 3 yesterday, but also a gradual increase in the retirement age. So very much responding to the census results because of the timing. We've had a lot of economists say that this does show that China is concerned about that declining birth rate and also declining population rate, and they're reacting to it by first making these gradual changes, and then if they're not seeing the results they want, we may even see them get rid of the birth limits.
Lucille, before I get to my next question, just for our viewers here, so we're looking at cable right now, 142.45. I thought I was going to be talking about the Chinese currency, but at these levels, we're essentially back now to the highest level since April of 2018. I guess this underscores that undercurrent, of course, when it comes to the currency market, the weak dollar, and hence why we are talking about the Chinese currency, which we'll get to when that fix comes out. But in the meantime, Lucille, let me bring you back in. What are economists saying? What are demographers saying? I mean, will this move the needle?
Right. So I think they're saying that since raising the one-child policy to the two-child policy in 2016 didn't have the effect of reversing declining birth rates, they're not expecting this to do that. However, this could signal the start of more policies, you know, tax subsidies, housing subsidies, money for education, for maternity leave. So it could foreshadow more policies from the government, but this alone probably not enough to move the needle.
Okay. Lucy, we're going to mark the fix for the day. We just talked about sterling. We're going to talk about the yuan, of course, the fix for the day in focus after that policy action by the PBOC. You're looking at 6.357 is the fix, so weaker than the estimate. So that's the third day where you've had the fix weaker than the estimates. The estimates have been for 635.56. Currently, the offshore currency is trading a little bit stronger. Let's get back to this story then, Lucy, and thank you for your patience as we interrupt you with these updates on the FX markets. In terms of what's happening on the social media, what has the response been then online to this decision, this policy change around 3 children per family?
There's been a lot of reactions and lamenting from people that were born under the one-child policy about having to support 4 elderly parents, 3 children, having a large mortgage debt, and then now having to see their retirement age raised. So I think, so they're in a tough position. I mean, we've also, of course, seen vendors and companies use the opportunity to sell cars or bunk beds that are more suitable for larger families. But yeah, the problem here, I think, is really that China is trying to tackle these massive demographic challenges. And so this is the first step, but I think we're likely to see more.
Yeah, there we go. Lucille Liu there, our China government reporter. if you thought stocks were expensive, try having kids, right? Gabriel's still with us, of course, out of Teneo, SVP and channel analyst there. He's joining us from New York. Gabriel, chime in. I mean, we're obviously no longer 50 years ago when obviously technology wasn't as supportive to productivity. China's no longer the production hub it once was, nor I would imagine that is no longer, of course, its ambitions. Does it need people? Does it need this much people?
Well, China would certainly like to take whatever steps they can to boost the birth rate, but I don't think they're under any illusion that today's announcement is going to be a game changer. The more interesting thing to watch, I think, is what Lucy mentioned about the social welfare system, and the Politburo announcement of the family planning change was accompanied by a reference to some of the barriers that families face or the discouragement they face in terms of the cost of raising kids, whether it's housing, education, healthcare. And that's been on the agenda. Expanding the social welfare has been on the agenda for many years now, but it's proven to be very politically difficult. So I think the question is, are they now going to get serious about some of those increases in social welfare that would boost birth rates, or is it just lifting limits? Because if it's just lifting limits, I think it is too little too late.
Gabriel, how does this tie in then? And David asked you about this before the break, the all call that the end of rebalancing is here now with China. How does this change around demographics and that challenge that policymakers here play into that theme and that theory?
Well, we saw this very interesting working paper from the People's Bank of China in March arguing, and it was a paper about how China should deal with the effects of demographic aging, and it argued very forcefully that continued high rates of savings and investment will be key to resisting some of the problems with aging that other countries have suffered, and in particular investment in automation, capital expenditures in the kinds of technologies that can replace labor with machines. And of course, that campaign dovetails nicely with the so-called dual circulation campaign, the effort to reduce reliance on foreign imports of high technology given the sanctions from the U.S. And so I think while they'll try to boost birth rates a little bit, they're also resigned to the fact that the working age population is declining, and they're making they're going to encourage capital investments designed to counteract the negative impact of that.
And given that specific objective, and to your point, Gabriel, that they are either embarking or have already started this rebalancing back towards investment, it doesn't seem that China has made the necessary investments in capital stock to achieve that objective. Would that then be a bad thing, if you will, if we do see investment-led growth in the next decade or so still?
So I think alongside this recognition that high rates of savings and investment need to continue is a similar recognition that the investment needs to change its focus. So we can't have the old playbook of transport infrastructure, of sewers, of high-speed rails, of roads and bridges. It needs to be the so-called new infrastructure, and this is another kind of new policy buzz phrase, new infrastructure, which means high-tech infrastructure. It means data centers, it means 5G base stations, it means smart city add-ons to traditional transport infrastructure. So again, the idea is rather than reducing savings investments, it's redirecting it away from traditional infrastructure where returns on investment are declining because the low-hanging fruit has been picked, towards this new infrastructure, whether it's advanced factories and advanced semiconductor factories, advanced manufacturing, or whether it's new infrastructure.
Okay, Gabriel, great insights. We have to leave it there. We're running short on time, but we do appreciate you coming on. Teneo's China analyst and senior VP, Gabriel Wildow. Right, plenty more ahead. We'll be watching the Caixin data out at 9:45, and of course, the market reaction to this reserve ratio move. Stay with us. This is Bloomberg.
Thank you. BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back. Right, some breaking news here. Transactions, we're talking private equity here. So you have KKR and CDNR here nearing a deal to buy Cloudera. That is, well, it could be finalized by the end of today. So that's Tuesday, of course. That's according to the Dow Jones. So we'll get you more on this, of course, once we do have them. A very brief look across the stocks that we are tracking today among very, of course, a partial list. JD Logistics will be included in some of these benchmarks. There we go, big pop in the stock. And, of course, MMG here placing some shares at a discount to yesterday, hence, of course, some declines that we are seeing in your pre-markets there. Tom.
Okay, let's get you a quick check of the latest business flash headlines. The Dalian Wonder unit is said to be drawing investor interest in a pre-IPO funding round that could raise more than $3 billion. Sovereign wealth funds, Chinese tech and private equity are among some 20 investors looking to back the commercial property management unit. Wonder Light Asset is planning to go public in Hong Kong later this year. Australia may see its second largest IPO so far this year. Copper miner 29 Metals and its shareholders are looking to raise about $470 million as they offer a mix of new and existing stock. The company will start taking investor orders on Friday and begin trading on June 23rd.
Okay, just minutes away from the open of your cash markets, so it's, well, kind of day two here for these baby-related shares, of course. We did get news yesterday, so we had a couple of minutes left in the Hong Kong session, very briefly on the mainland session. So have a look at day two here on some of these names listed here in Hong Kong. Massive pop that we got yesterday. Can we get that up, please? There we go. Some declines that we are seeing today, and here's a list, if you will. Let's flip the boards, please, just so our viewers can see. Some names you should track at the open and throughout the course of this session listed here in Hong Kong, Tom, and up in the mainland where you are.
Yeah, so those are the baby-related stocks on the back of that policy decision to allow families to have 3 children. Carrie Lam's weekly briefing as well at 9:45 local time, what she can be saying about the decision to allow executives and bankers to shorten their quarantine stay. We got the Caixin May PMI data as well, 9:45 local time. That will round out the manufacturing picture for us after the official data that we got out on Monday. We also have retail sales out of Hong Kong after the show. Casino revenue as well out of Macau. Plenty more ahead. Stay with us. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I don't see the direct lenders pulling back at all. In fact, I see them being a very important force, and we partner with many of them going forward. Yes, it's an extremely competitive environment.
Good morning if you're joining us from across the Asia Pacific. Good evening if you're joining us, of course, out of the United States. Here we go. That's the approach towards the open. Not much as far as price action in your equity markets are concerned. There's a lot happening, though, in the currency markets where, for one, you have sterling now at the highest level, strongest level since April 2018. And for another, you have the dollar China, dollar offshore now, Tom, stronger. We're trading at 636.31 despite all these measures that we've heard these last 48 hours or so.
Yeah, of course, dollar weakness is exactly what policymakers are focused on here in Beijing, along with that yield differential, along with the fact you continue to see inflows in terms of foreign inflows into the assets here that are driving the currency higher. You did have that fairly momentous decision then from the PBOC to increase those reserve ratios, first time since 2007, taking out some of that foreign currency in terms of onshore and putting pressure on the yuan, although the yuan is strengthening now. And the consensus view seems to be that at the very least, you're going to see a slowing appreciation rather than stopping it and weakening the currency. The CSI 300 is currently down 0.3%. Yesterday, you saw some modest gains on mainland shares. They're green on the screen. Today, it's a different picture. Shanghai Comp is also down 0.3%, and a bit more selling in the Chinex, the small caps. By the way, that Caixin PMI manufacturing data for the month of May will be out at 9:45 local time, and looking, the survey's at a print of 52. Some stocks to watch, baby-related stocks, of course, on the back of this other major policy announcement out of Beijing. Families will be allowed to have 3 babies. You saw a pop in terms of births back in 2016 when they allowed families to have 2, but it was only temporary, as David has been breaking down for us across the morning. Here are some of the gains then you're seeing in some of these baby-related and fertility-related and biomedical-related stocks that are linked to this family planning policy change. Changing it onto the currency remains squarely in focus. The third day when you had a fix that was weaker than the estimate, 636 in terms of onshore. The yield for the 10-year, 3.068. Not much move there. David.
Okay, yeah, we're down about 85 points in the Hang Seng Index, so we're back to 29,000. To be frank, this index hasn't really gone anywhere in terms of any sustainable way. Momentum has basically disappeared either direction, really. We're looking at H-shares index. Within that, of course, your 100-day moving average within that index. HS Tech about 0.8%. So Tom had his version of the baby-related stocks. We have, of course, some of the stocks listed here in Hong Kong as well. Just keep in mind, a lot of these names actually were gained towards the close yesterday in double digits. So we're seeing some of that getting pared back a little bit. One-day pop, if you will. In fact, right now we're looking at declines and really some money being taken off the table here, about 0.4%. All right, what do you have there? Bottom of your screens. That's the biggest IPO, biggest trading debut in the Philippines ever, the Monde Nissin. It's a noodle maker. They raised $1 billion. They're essentially looking to use that money to invest in alternative protein and that revenue stream, which Henry Susanto, of course, has spoke with the boss. And you'll hear that interview in a couple of minutes. He told me how they plan to use that money and how much growth they actually see within that sector. So they have big plans ahead. Do not miss that exclusive interview. That's coming up in a couple of minutes. In the meantime, let's talk more about these Chinese markets and those two stories. So you have the currency story and, well, you have the baby story. I guess to make it very, very simple here. Let's bring in Vincent Chan, China strategist at Alethea Capital. Of course, he oversees, of course, investment strategy there for us, for them. Vincent, good morning. Thanks for coming on the show. I mean, where do we start? I guess we start off with this whole long-term consumption push out of Beijing to encourage families to essentially get bigger. Do you think it's going to work?
I think, well, it's not easy, and it will take quite a lot of changes in the society to make it work. Put it this way, as you mentioned earlier, Chinese government has changed one-child policy to two-child policy about 5 years earlier, and the net result is very marginal. Indeed, population growth continues to decline. And if you ask the question, the marginal number of people who want to have a second child is definitely more than the marginal number of people who want to have a first child. So I think under the current environment, it will not be easy. And indeed, this is not just a China problem. Look at East Asia. East Asia birth rate are extremely low because there are some fundamental issues in the East Asian societies. We are very competitive. The house living environment is not particularly good. Education is very tense, expensive, and competitive. And generally speaking, East Asian societies are pressure cookers. Why do you expect people to want to have a lot of children living in a very small space and a pressure cooker society?
Right, and you've looked at the Chinese markets for a long time, and for as long as I can remember, Vincent, the China consumption story and the long-term plays surrounding that concept have been around for several years. Do you think at all this changes, or this removes some of that allure of the future of the Chinese consumption play?
Not necessarily, though, because I think the Chinese consumption has various types of other dynamics. For example, general income improvement makes people want to consume more, urbanization. And actually, the reality is that indeed, even people have only one child, the amount of money they put in that child actually increased exponentially in the last 20 years. So in a way, the consumption story is still there. The question is whether people want to have more bodies around, they will put more money in a single body rather than giving more babies.
Yeah, Vincent, you don't have to go very far in Beijing to find some incredibly highly priced activities and services for children. A stronger yuan will help with parents and families there. Does it, and to what extent is the currency correlated then to A shares? That is my question for you. The correlation between A shares and the currency given this move by the PBOC?
Now, generally speaking, my take is very simple. For any stock market, you want to buy in a stock market which the underlying currencies are appreciated. That's the general rule. So overall, in the long run, look at the U.S. market. Well, U.S. dollar reasonably strong. Market looks good. That's a general rule. I don't know too much technical details about the recent move by PBOC to increase the reserve ratio on the foreign currency. It seems to be a move to try to dampen the expectation of a very fast appreciation of renminbi. So my take is that it probably will not be given the fact that anyway, foreign currency loan and foreign currency deposits account for a very small portion of China's banking system assets. I don't think it will be a game changer itself. But generally speaking, in next 1 to 2 years, with the Chinese growth looks like to be much better than many other parts of the world due to the COVID-19 control. To a large extent, I think renminbi will remain strong. And if that's the case, it
Vincent,
helps the stock market.
Okay, Vincent, what is your case? What is the case for old economy stocks in China at this point?
I think there are 3 reasons. Number one is that old economy stocks, generally speaking, are more cyclical in nature and more sensitive to the economic upturn. And in 2020, 2021, and 2022, we basically can reasonably expect that the world economy, not just China, will rebound from a very low base in 2020 with the COVID-19 gradually behind us. So I think the earnings upgrade for old economy stocks will be stronger than the new economy. New economy stocks already benefit much last year already. Secondly, valuation of old economy stocks are like one third or even lower, generally speaking, of the new economy stock. So I think valuation also helps. And particularly under a risk of a rising inflation environment and rising interest rate environment, high valuation stocks, generally speaking, are more vulnerable in any PE shrink. And finally, in terms of regulatory uncertainties, I think the reality is that around the world, governments are still working out their relationship with big tech, how to control them, how to regulate them, no different from China. In contrast, I think the regulatory relationship between the Chinese government and cement companies more or less settled decades ago. So the potential new regulatory risks of new economy stocks are much higher than old economy stocks. So I think combine these 3 factors, yes, I think year to date old economy stock outperformed. But I think given the last year's massive outperformance of the new economy stocks, I think this reversal to mean has not yet completed.
Yep, and Vincent, of course, that takes us into your final point that the market will be range-bound throughout the rest of this year after the strong rally we had in 2020. Vincent, have a great rest of your week ahead. Vincent Chan there, China strategist at Alethea Capital. Speaking of an old economy stock, and just back to this massive debut that we get in the Philippines, I wish I had more exciting news, but have a look at that first day of trade. It looks like the bankers got this one right, did not leave any money on the table, left off the table here, Mondanis, and there we go, essentially flat at the open. I spoke with a boss. Have a look.
During this pandemic, a lot of companies are trying to scale back the investment and things like this. But we are a bit different. We are among this company. Despite of this pandemic, we are still doing quite okay. But in addition to that, also we are part of the companies that we have to expand a lot during this period, because the portfolio that we have, which is alternative protein, is poised to grow exponentially. So we don't want to miss the opportunity. We want to have the fund ready. We are going to use it immediately for our capacity expansion. That's why, albeit this pandemic, we are still seeing this is a good time to pursue this IPO.
Why that specific amount? Why not raise more?
I think the use of proceeds is very important here. Okay. With the amount we are going to collect during this IPO, that's the sweet spot of the amount. We can, use that majority for the capex, and at the same time using it for paying down the loan. The amount was just, at the sweet spot. We just do not want to raise too much at this point, right?
I'm sure you and your team have an assumption of how quickly you think this alternative meat business and protein will grow over the next 5 years. Could you give us an indication of what that annual growth clip might actually look like?
Definitely, David. If you look at the trend today, this is a mega trend in the world. Whatever research that you're going to look at, everything is pointing into exponential growth in this category. So we are less than 1% today in this space. I mean, the protein space. We are less than 1%. So 99% is the traditional protein. The addressable market here is huge. It's got $1.4 trillion. So everyone is predicting in the next 10 years, this sector, the alternative protein, will grow from currently less than 1% to become 10% in the next 10 years. So 10 years, 10 times, that's exponential growth.
To clarify, that's 10% of the market, or is that 10% compounded annual?
10% of the total protein market. So 1% to become 10% in 10 years, that's 1,000% or 10 times in 10 years. Exponential growth, really.
Longer term, you eventually see this new part of the business then taking up the majority of the overall revenue pie for Mondanisin.
You are asking about the other business portfolio like instant noodles. What are we going to do with this? With that kind of aspiration, we are very, very serious in this commitment. We are going to improve the health proposition of instant noodle to make it much healthier, to make it more sustainable in the future. As we speak today, we have this kind of technology already. So we are launching already in the Philippines since a few months ago. And moving forward, we are launching also in other territory who we feel that we have the right to win.
Outside of your home market, of course, whether that's this new alternative protein business or your traditional businesses and brands, talk to us about your plans outside the Philippines and how fast, how quickly do you think that part of the business is going to grow?
So alternative protein currently is being done in UK. So we are going to protect the leadership in UK. We are the dominant market leaders there. Next will be USA. We are going to focus our effort into USA. We feel that USA is so far the fastest growing market in this alternative protein. And then 2 years from now, maybe, we're going to move to Asia. If you notice, for example, the government of China has announced in the next 10 years, they're going to reduce the consumption of meat by 50%. unlike Europe and USA, they are in the forefront of this, alternative protein. But Asia is coming up a bit late. We foresee that, but it's catching up, perhaps in the next 2 to 3 years.
And that was Monday Nissan CEO Henry Sucinto speaking to David exclusively. Right, let's get the first word news with Paul Allen in Sydney. Paul.
Malaysia has unveiled a $9.7 billion package to help people and companies through the 2-week nationwide lockdown that begins on Tuesday. Prime Minister Muhyiddin Yassin says the relief is aimed at boosting healthcare capacity, increasing cash aid and ensuring businesses' continuity. It's the third package this year. Malaysia is facing a worsening outbreak that's left hospitals low on ICU beds. Singapore's Prime Minister has pledged to reopen the economy as the city embarks on a mass vaccination drive, and its recent surge of cases comes under control. In an address to the nation, Lee Hsien Loong said the government would likely start easing restrictions on June 13. He's aiming to get 2/3 of residents inoculated with at least one dose by early July. Pakistan is said to be considering a stimulus package to support the economy as it battles another wave of the coronavirus. Details are still in the early stages, but newly appointed Finance Minister Shaukat Taran is leading the initiative, and Bloomberg understands it could be monetary or fiscal or both. Pakistan's economy is expected to expand 3.9% this year after a rare contraction. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
All right, just in time, the Taishan numbers are out. Manufacturing, we're talking for May, we're talking China 52, just about in line with estimates there are 52. At about the same time, I should also mention, you look at the offshore currency, we're essentially back to levels before the PBOC came out with the latest measure to stem the currency strength. Roughly speaking, we're not trading at 636, 38. So yeah, on that note, in fact, we'll unpack more of these numbers for you guys on the other side of this break, because on top of this, we also had a lot of PMIs coming out from the rest of the region, plus a lot of export numbers. You had this massive one out of South Korea. So all those things are just ahead. You're watching Bloomberg.